So today we're going to look at the two types of entries that I use personally in my trading. The first one we're going to look at is that set and forget entry style of trading. And the second one is going to be the confirmation entry. I'm going to go through a couple of examples on this AUD US dollar 4-hour time frame and the way I'd look at approaching both when looking to take the trade. So the first thing we're going to look at is the use of this technique I'm going to share with you in this video now. Going through marking out areas of market structure. Now, the easiest way for you to find areas of structure in the market is going to a line chart. It's going to make it a lot more obvious for you to understand where those areas are. We can identify those lows in the market and where those highs are sitting. We can see where we see a break of structure and a new higher low is formed, and we have another break of structure and a new swing high is formed. That is how we can identify market structure using a simple technique of going to that line chart. So what about those wicks, you ask? Well, the wicks are actually used for those manipulations in the market. The wicks are actually where you're going to see those banks, institutions moving the market to stop you out. Let me show you an example. We have this wick here in the market, this low. You can see that we wick through and then we rally back up to take that high. So when we're using wicks on candlesticks, we're actually looking at those at reversal points in the market where you can capture potential great entries. Now that is a totally different strategy. Perhaps you want to see this type of trading. If you do, leave a comment below and let me know that you want to see that. In fact, give me a thumbs up. Let me know that you want to see a video just like this. And perhaps if we can hit 1,000 thumbs up on this video, I will do a video going through understanding the wicks in the market, how you can use this strategy to generate more profits. So when we start to look for our structure in the market, we go back to that line chart and we'll start from this low where we can mark out this swing low. We can also identify right now, we do have this high in the market, which is broken out at this level. Now we do have a minor break already as well, this area where I just went through showing you where we create a new swing low in the market and we continue to break through. But at this point, when we see this breakout, this is going to confirm to me that the breakout has happened. And we create this new swing higher low in the market here, which breaks out this structure high. Now, once you understand that this is the market dynamics, using the line chart, we can continue to mark these out. You can see where the market continues to break higher. And this is how simple it is to draw out your areas of market structure. And we're also going to see here, which I'm going to show you quickly as well, that we see the market breaking up. We actually break structure to the downside at these areas, and we're dropping down to do what? Well, we're going to find that there's most probably an area here. We can see a swing low is removed and then we drop into this low. So we'll look at that in a moment, exactly how the market moved here. In fact, there was actually also right here in the market, I'm going to show you how you could have caught a entry using the confirmation entry. But at the moment, it's going through the understanding of this technique using a line chart so you can understand how to mark out your areas of structure. And again, we can identify a new swing low is formed here when we break out of this high. And again, we have another new higher low where we see a break to downside and we can mark out this high. So that's how easy and very quickly you can mark out your areas of market structure. So now let's look at those entries, the two entries we can use and understand taking an entry with the confirmation entry or the set and forget strategy. The first thing we're going to look at is the set and forget strategy entry. And if we go back to the price chart, we can identify down here where we have the market breaking that first area we just went through, where we saw a break up this area here and a break through this high here. That is showing me a shift in trend. Now, the easiest way to mark out an area of demand, and what I'm going to do now is go closer into the chart for this, just to show you, is you want to find the swing low. So we have the swing low here. That is the low of your zone where we're going to be taking that entry, and we will mark off the last push down from the open price and put a line across. That is your entry point. Your stop will be below this low, but this is your entry point. That's the easiest way for you to use a set of good strategy entry. Simply here, you'll be taking an entry at this level, stop goes below this low, and your target then would be this high. And drag the line across, and you can see we have nearly a 3-to-1 risk reward. Not a great risk reward, I know, but understand the risk and money management of your strategy. You continue to hit 3-to-1's risk to reward, you will continue to make profits long term. Using this type of strategy, using the line chart with your market structure and these entries I'm now showing you is going to help you massively with taking these trades. So again, we can identify here where we break structure at this area on the chart. We break up, we also leave this push down, we actually manipulate this low here. You see these wicks. Again, can you see how these wicks have actually formed that manipulation? And remember what I said, leave that comment if you want to see a video on this. And we need to get those 1,000 likes so I can do that video if you want to see the video on how to trade with the use of the wicks. But this is showing you just where we can see the structure breaks of the closing of price. That's what the line chart is showing us. But again, if I draw a zone here, it's going to draw a demand zone right here in the market. So you can see this is a demand zone that we're interested in. We break out, we have not come back. We have tested this demand zone at this wick into it. We can mark this off. And let's change this to a solid line. This is a level that is important. We have a wick low here. It's an important level there. So we'll come back to this in a moment. But we continue to go forward. And if we go back to marking off this swing high, we can identify that the market is breaking structure here and continues to break structure on the way up. So when we see the market breaking out here, again, we'll use the line chart to identify this is a correct break of structure. So this is your break of structure, continuation of the trend. This is your new swing low in the market. Yes, we do have a small break here as well, and that is in fact broken through to downside as well as this level here. So if you were to use a set and forget entry style at these areas, you would have actually lost to the market. I will show you a different strategy to understand reading what is happening here. That you will find at the end of this video, but you're going to have to watch the rest of this video to go through and find out what that is about. And we can identify when the market comes back in here, that's dropping deeper into this area of demand. We have an area of demand left over here, which breaks this structure. And you'll be able to witness, we mark this out, we mark it out from the low, which remove this level, we mark it out from the swing low to the last bearish candle. That's this one here. So we can mark this up. That is our area where we see the push down before the breakout. And again, we have this long wick pushing in. I'd mark off this low as the area I want to see removed. And you can see the market comes deeper, removes that level, reverses, and we head back up. Just as we can see here, I've got it marked as ready. We can see the push into the area of demand. Now, more on those on future videos, what that level is. But you can see exactly what is happening here using these levels of market structure. Now, you may have had, let's say, an area here of demand drawn out. And if you had a set of strategy entry here, you would have lost. And again, if you're going to use this zone, you would have another losing trade. But in fact, you wouldn't use these two because they're too close together. And you would have had something like this overlapping. So you wouldn't have used them both, just the one. But that would have lost. But there's a way you can look and understand this by using the imbalances in the market and these swing lows in the market with those wicks. But once we see the market dropping down into this area of demand, going below this level, that's a great opportunity for a buy and continue up. And right here, what we can use to confirm this reversal once we see price going below this level is that confirmation entry. Now we saw down here the use of a set and forget strategy entry. Now we're going through this here on the chart to look for that confirmation entry. As we're actually breaking structures downside, we need to confirm a reversal here, especially when we see a momentum drop like this into the area of demand. We have a choppy zone down here, so we could just see price continue straight through. In hindsight, we can see the market goes up. I'm going to show you now on the 30-minute time frame how you confirm this to before you take that entry. Let's go down to 30-minute. And we go into price here. As we see price coming down, we do the same thing with market structure. You go to that line chart, you'll be able to start marking out those swings in the market. We have a lower high here, a new lower high, and another lower high here. And eventually, we can see that we have a final break of structure to downside right there. And just get my line. We do have a break of structure here. But looking at this, this looks like a nice swing high. So let's go back to price. We can see where the market kind of chops this area in the chart. And we see the market pushes down, bounces, and it manipulates the low here. We can see that we mark off this swing low. We have a spike through and a rally back up. So for this, we mark out an area of demand right here on the chart. And we can identify the market rallies up, comes back down. This is then your entry point. So you actually take an entry here off this area, you'll stop at the low, and you'd actually look to target this level where we can see the break of structure would occur at that area on the line chart. So we can identify the market's gone from being at this area, let's mark this across, to nearly just over 9-to-1 risk to reward. So that's how you can actually increase your risk to reward using a confirmation entry. Now, I'm not going to lie to you. A confirmation entry, you may not even capture that trade, but it's going to give you less losses and a higher risk to reward on most occasions. So if you're prepared to wait for that trade to come for you and use good money and risk management, then the confirmation entry is a great strategy if you have the time to watch those charts. Now, of course, you can apply this to many different time frames. And you can actually look at even a monthly time frame with a daily confirmation entry. It just depends on your risk appetite and the time you have to sit at these charts. But you can see here in this video today the way you can use the line chart to fine-tune your areas of market structure, whether it be on the confirmation entry or on that area when we're looking for this set and forget. And now at the same time as this, we're going to use price, drawing out our areas of supply and demand. Now, going back to that area of demand that we saw down here, let's remove this level, remove this area of demand. Where we saw price down here, we have this zone left over, remove this. We now have price breaking up. We also have this area of demand from this low to the last. This is the bearish candle down before we see the move up. So this is our swing low, like we see down here, our swing low. And we're interested in seeing the market coming back down into this area. And once again, we don't actually have price testing this zone. It's a fresh zone. And more on that in a future video. But we can see that this is an area we want to see price come back into. And that's what we now see in price doing, is coming back into this area of demand. And again, looking at price, you need to understand reading those candles. We can identify here we have some strong momentum moves to downside. So to take a simple set and forget entry off this area would not be advisable. Again, this is a strong move down. That's why we look for that confirmation entry. But looking at this, we have a nice strong move up. We have a smaller push down. This is any strong move we have down into the area of demand. Not like this strong move to start with, like we can see at the reversal point. So here we'll be looking for a potential confirmation entry once again, for the market to go back up. Now, this is a short-term move back up perhaps, but we do have some areas of imbalance above. And again, later you'll find a video coming up which will teach you about the using of imbalances where we look for those potential targets. But if we now go down to this area again on a 30-minute time frame, we'll be looking for that same reversal out with a confirmation entry. And the use of the confirmation entry will give you confidence in your trading as well. We can identify a break of structure here to downside, leaving this swing high. So in theory, using this type of entry, we want to see the market breaking out to the upside, leaving us a new area of demand, just like we saw on that previous area. So this is actually live price right now, and what we're looking for any reversals out of this area of demand to give me a potential move back up for a short-term move into areas of imbalance or up into the area of supply. So the area of imbalance, quite simply, is an area we can see here. The market left over is an area of imbalance, but I'm going to show you much more detail on how to read those imbalances, the use of market bias as well, in this upcoming video, which goes through on breaking the code of imbalanced trading.